All right, so builder and developer financing masterclass. Want to put this together for quite some time, so excited to be able to walk you through this. But this is going to be going over financing spec homes, ground up construction, small development projects from lot acquisition through final sale. A little bit about myself: 24 years in this industry, blessed to be able to do it. Rank pretty well within the market nationwide, but our areas of focus: broker plus direct lender flexibility, builder and spec home financing, investor lending, and DSCR exit strategies. So we're going to talk about the project, types of builder projects, buying land, sharing building, balancing the money, draw schedules, budgeting, the business exit strategies, building your team, and common mistakes. Today's roadmap is from dirt to done, right? The full arc. Land, acquired, construction, financing, the draw periods, which upon each item receive a draw, completion, exit. Why builders need different financing. Building isn't buy. Builders face carrying costs, material cost inflation, labor shortages, permit delays, interest rate risk, ongoing cash flow management. Types of builder projects would be single family homes like your spec homes, custom homes, ADUs, small scale built to rent, townhomes, small family. And there's larger projects like subdivision development, luxury homes. Understanding builder financings really designed to do five things. Builder financings designated to acquire land, build improvements, release funds through draws, pay off construction debt, transition to sale or permanent financing. Spec home financing, a home built before the buyer's identified. Potential benefits, higher profit potential, more design and finish control. Potential risk would be, of course, holding costs while unsold, market time risk, unsold inventory exposure. So built to rent, build, rent, refinance, hold, repeat. I see this time and time again. I've done it a few times over myself. Um, at least bought a few properties that need to be renovated. They were really down to the frame. One of them, in fact, rebuilt it. Great property, does quite well, right? Great way to develop a portfolio. So buying land, key considerations is looking at utilities, topography, access, zoning, entitlements, environmental reports, and soil conditions. Raw land versus finished lots. Raw land, high risk, more unknowns, infrastructure required. Finished lots, utility already installed, roads complete, ready to build. Acquisition, cash base is cash or bridge loans. Finance, land loans, portfolio financing, construction financing. Construction loans. Key features include interest only during construction, draw schedules tied to progress, inspection-based fund releases, temporary financing, converts or pays off at completion. Construction permit, one closing, one approval, lower total cost. Long-term financing or secured. The most relevant is when you're selling to an end buyer, financing purchase, not your spec inventory. Draw schedules are simple. Typical draws, here's an item, right? Basically, after loan's closed, an amount's held in escrow. So once the foundation is completed, a draw is then sent to the contractor builder for payment. And then, of course, after framing, same thing. It's inspected, then that draw goes for the framing. Mechanical, same thing. Drywall, finished, and final. Builder requirements, lender general review, active license, current insurance, financial stability, relevant experience, verifiable references, and a track record. Budget management, hard costs would be construction materials, labor, soft costs, permits, engineering, architecture, reserves, interest reserve, and contingency. Soft costs, what's included? It would be things like permits, plans, engineering, architect fees, legal, survey, insurance, interest carry. Hard costs would be labor, materials, concrete, framing, roofing, electrical, HVAC, finishes. Contingency planning, unexpected expenses can happen. Material costs, permit delays, weather delays, labor shortages, design changes. Always build in reserves. Treat the contingency as part of the budget, not an afterthought. Super important. So here's an example. Your largest share is interest, ongoing property taxes, insurance. Smaller if there's utilities or HOA, and then at sale, right? So interest is often the single largest carrying cost during construction. Plan your draw pace accordingly. Builder cash flow. How to avoid running out of money. What to manage? Realistic budget, draw timing, adequate reserves, coordination across multiple projects if applicable. Clear exit plan before you start. Build to sell. How builders make money. You purchase, you build, you sell, you repeat. Right? Strategy one. Strategy two is build to rent. Build, lease, do a DSCR loan to recover some of that capital. You hold and scale. ADU development. Common project types would be garage conversions, attached or detached ADUs. And why is growing? Multi-generation housing needs, rental income potential. Small developers are looking for duplex, triplex, fourplex, townhomes, small infill projects. Those are usually pretty common. And so exit strategies would be the finished project, you sell, refinance, do that DSCR loan that we mentioned, which is a long-term rental financing, portfolio loan, and or 1031 exchange, deferred taxes into the next project. So know your exit before you break ground, not after. Working with realtors, how they help. Finding buildable lots, finding buyers, securing pre-sales, working the finished project, neighborhood level analysis. Working with architects, how they help. Plans, value engineering, permit navigation, timeline management, construction documents. Working with investors, there's private capital, joint ventures, JVs, right? Equity planners, debt partners, preferred returns. So we build out a mortgage coach analysis, which unpacks all of this once you apply. So we go over kind of your strategies here, your exits, your long-term cash flow, interest during the build. What does that look like? We want to go over these things with you in great detail. Common builder mistakes would be things like buying the wrong lot, no contingency reserve, or budgeting, overbuilding for the neighborhood, poor exit strategy, choosing the wrong financing, ignoring holding costs. Some builder case studies to spec up. Single spec built in a strong resale market back in Northern California, Sonoma County. Used a construction loan through the sale, sold within the projected window. Worked out really well. The ADU, we had one actually in Laguna Niguel. Built a detached ADU on an existing lot. Used a specialized ADU loan, was a second mortgage, and added rental income for that property owner. They rent it out now. To build to rent, we had a client who had a property to hold, not sell. They wanted to develop a portfolio. So they found a lot actually in Big Bear, and they got a great deal on it. Actually, it's Lake Arrowhead, pardon. And so they built on it, and they ended up turning it into a short-term rental in that market, and it does quite well still today. Builder checklist would be land, plans, budget, builder team, permits, financing, insurance, and exit strategy. Current market opportunities would be California infill lots, ADUs, small subdivisions, built to rent, luxury custom homes, fire rebuilds, and multi-generation housing. Some questions we often get would be, how much down payment do you need? It varies by program, experience, and project type. Definitely worth a conversation about your specific deal. Give us a call. We'd love to talk you through it. As low as 5 to 10% down in some cases, if you have the land, is what we're saying. But what if your project runs over budget? This is exactly what contingency reserve is for. So you want to plan for it before you need it. Can you finance your first spec home? Often yes, experience helps, but it's not always a hard requirement. Can I do construction and permanent loans for a spec home? Generally, no. That structure is designed for owner occupying buyers, not builder inventory. So why builders work with our team? Road construction financing expertise, broker plus direct lender flexibility, fast responsive approvals, clear builder communication. We have a full analysis, as I mentioned before. Multiple investor products, DSCR strategies, bridge loan access. A lot of strategies here for you. Builder resources, budget worksheet, draw schedule guide, builder checklist. We have a timeline template, financing comparison guide, permit resources for you as well. Next steps would be reviewing your current project, review your financing, review your budget, review your timeline, build a financing roadmap. If you have questions, of course, schedule time with me. Links down below. But there's my contact information. Again, call, text, email, or again, check out the captions, see the link, schedule time with me. I'd love to chat with you.